situation is the bellwether of the start of a new upcycle in the global economy, or the renewal of an upcycle, then commodities will have to move. All right, so let's take a look at some commodities. All right, first, let's go over and take a look at the copper situation as depicted by the ETN on copper, right? The JJC. Now, I don't know about you, but this is a pretty big distribution top pattern, and I don't think there's any other way to view it. Now, I would say all of this in here is resistance until you get to about 40, 42.80, 43. So late last week, copper was actually coming down. Now, if the market's supposed to be a discounting mechanism, then I would think that copper would have been up here. And then I would have said to you, well, it looks like this downtrend is broken in here. Widen it out. And, you know, it's off to the races. Something's going on that copper likes. But copper had a really tough Wednesday, Thursday, and Friday of last week. And if I didn't know better, I would say that it's struggling. Plus the fact that it's below all its relevant moving averages, the 20, the 50, and the 200-day. In fact, people who watch the 200 and the 50-day interaction are seeing that you have one of these kind of death crosses happening, where the 50-day is about to cross under the 200-day. Very tricky situation. So copper, right now, as a discounting mechanism, is telling me that it didn't see this China thing coming, which is hard to imagine, because the Chinese would have been buying copper ahead of the fact. So what do we do with this picture? Nothing. All we do is recognize that copper, as a discounting mechanism of what could be potentially very powerful news from China, hasn't started to discount it in the least. And as far as I'm concerned, it's telling me just the opposite. It's telling me that demand for copper is not lifting. And I don't know if that's a U.S. story, a China story, a European story. I don't know. But I don't like the way this looks. And the bottom line for me is that this copper picture has to prove to me that the situation, the global supply-demand situation, the global growth situation is improving. And right now, I don't see that in this picture. Okay, so let's give it the benefit of the doubt and go over to Freeport-McMoRan. Same sort of picture. Now, Freeport is copper and gold, and when the economy is sluggish, people look at it as a copper miner, and when the inflation is rocking and rolling, they look at it as a gold producer. And right now, or lately, more than lately, the last several weeks, it pretty much has struggled because it's perceived as a copper producer in a sluggish U.S. and global economic environment. That's how I see it. Okay? To get any traction on the upside, Freeport, FCX, has to take out 70, this high in here, 71.50, and then I think we can start to talk. So it closed at 65. I don't know if that was the actual close. All right, 65.90, and it has to get over 71.50 divided by 65.90 is there's an 8.5% move that Freeport has to do, in my estimation, to get me excited that maybe this whole thing is a correction done, new bull phase. All right, we'll have to see what happens. And right now, this picture looks more toppy than anything else. And, while it's while you can trade at FCX, my sense is that this whole toppy phase is not done yet on the downside, fulfilling its downside potential. Let's notice also that you had the death cross of the 50 under the 200-day back in early June, 2.5 weeks ago. So this is a tough one. It's a tough one, and it's telling me that Freeport should have been a lot higher based on the anticipation of this China currency move, or even if it was discounted as something that needed to happen soon. I think probably that as a discounting mechanism, both Copper and Freeport are telling me that this China situation probably is wordy, politicized jargon rather than action. All right, and it'll be later than sooner before the Chinese actually revalue upwards. Okay, but that's just what the copper situation is telling me. All right, let's go over to steel. Let's go over to the SLX. All right, this is the steel ETF. Now, this doesn't look all that great either. It looks like it's a distribution top that has tested and so far has held this 52 to 54 area. It has this kind of left shoulder, head, right shoulder kind of thing and going on, and it looks like if there's an upward move in the SLX and steel, then it'll get into this 61.5 area and test the declining 50-day. Now, it closed at 58.09, and let's say it goes up to 61.20. That would be a 5.5 or a 5.4% up move in the steel sector. Based on the China news, possible. Who knows? I mean, obviously the steel sector is going to respond extremely favorably to any real growth prospects that are reemerge from China. All right, so let's, like we did in copper with the ETF and the ETN. Now, let's see what U.S. Steel looks like. Well, U.S. Steel is what looks like one troubled situation. I mean, this is a really big top. This is more of a top than is on the SLX. So, when I look at this, I say, well, I can't get all that excited about this. If it pops, maybe you can get back to $49. But SLX and X, both are telling me that I wouldn't be too enamored with China to pull this sector out of this situation, which looks pretty dismal. Like, growth prospects and the perception of growth globally and domestically are on the wane and not improving. All right, so let's do something else. Let's go to let's put up a weekly. Well, that is just one dramatic picture, and that is telling me that this is not pre-2008 Olympics when you were in here, and China was buying everything under the sun ahead of the Olympics. All right, this is just the opposite. So, I have to be really cautious here before I go out, for instance, tomorrow morning and say, okay, I want to be long commodities and equities and all these risky assets. I want to add risky assets. I want to get out of the safety, the run to safety of treasuries and gold. I have to be really careful now because I just don't see it from these charts until the charts prove it to me. All right, so let's take a couple of others. All right, let's take Nucor. Nucor also has a sort of suspect looking chart. Can it rally? Can it rally to 43.5, 44 from 41, 8 to 10%? I guess it can. Whether or not it can get through this mess is a whole different ball game. So who knows what's going on here? I'll tell you one thing though: if it breaks 40, it's gonna, down to 39. It's going to be one dicey situation for Nucor. So that's another suspect discounting chart mechanism for what people think tonight might be the start of a new bull move triggered by the China news. All right,